I am here with Ben Rieder, the co-founder of Levenue
Yeah.
and CEO, and co-founder of Loom Finance. Ben, thank you for joining me. I'm excited to hear about everything you work on.
Thanks for inviting me.
My
for
pleasure.
having me here. Yeah.
So yeah, maybe we can start. I'd love to hear a little bit about yourself and your background, and of course, Levenue and Loom. We're going to get into all sorts of cool topics, but
Yeah. So I'm originally from Belgium. I've had a pretty weird start of my career, but basically I've always done my own businesses. Started with importing heavy equipment into South America. So I feel a bit back home right now. Then did a startup in transportation, but which had a pretty big tech part to it in Belgium that we sold. And since then, or after that, I started investing as a business angel, trying to help out early stage tech entrepreneurs in Europe, mostly Belgium, to build their business based on the experience I'd built myself, by helping them not only with money, but also with like a little bit of my experience. That turned into becoming an actual VC because we basically turned those investments into a fund. And then during COVID, I basically started reflecting on what I was actually doing and whether that was what I wanted to do and whether the role as a VC was the role I wanted to play, because it's a bit of a weird thing to do, being a VC.
I'd love to hear more about that after.
I'll go there. I'm happy to go there. Because in the end, you're giving money for a part of a company, but when shit hits the fan, so to say, you can take a lot of control and take people's dreams away, which is not always like to the benefit of the company on the very long term. Plus, it is really hard for these entrepreneurs to continue in that loop of raising every X amount of months. And I think that's where I started thinking about how can you give financing to companies in a less dilutive way, like empower the entrepreneur to keep his thing by himself, and then like what can then, from a financial point of view, what can you take as a security to ensure that from a risk point of view, it still all makes sense. And I think that in that thought process during 2019 and like big, deep identity crisis, like being locked up in your own home, Levenue was born.
Okay.
Yeah.
Okay, cool. So Levenue is a European fintech that provides revenue-backed financing to typically startups, but companies.
I wouldn't say startups, although like what's a startup, but I would call them tech companies, and with a very specific, or at least with a very specific business model, and that's the business model of having recurring revenue or clients that pay them on a recurring basis. So
ARR, MRR.
Exactly.
Something that's consistent and expected to continue.
Yeah.
Okay. So
because it's that recurring revenue, and especially like the future recurring revenue that has a statistical certainty around it, that we use as the underlying assets that is traded for the financing.
Okay.
So to make it really, really simple, an investor on the Levenue platform buys the next 12 months worth of ARR or MRR, because it gets paid on a monthly basis from these companies in return for direct cash for the company. So say you have 120,000 euros of ARR sitting there, that from a statistical point of view, you have a certain certainty around. It's never the entirety of their forward-looking ARR, it's always pieces. But let's say that's what we deem financeable. You could come in and buy that from the company by paying them 100K right now, and then you would be receiving 10,000 euros for the next 12 months.
Okay.
Being the contractual owner of these subscriptions.
I see. Okay.
And Levenue sits in the middle of that entire thing. So we always say we do three things. The first thing is originating the deals. So we have a network of partners that bring us companies looking for financing. We do the underwriting part of it. And from underwriting is analyzing everything. So a big part of the technological stack that we've built with Levenue has to do with integrating with bank accounts, integrating with accounting systems, integrating with CRM systems to make sure that we have a live view on the actual financial status of each and every company we help to get financing.
Okay.
And then once the deals are done, so on the marketplace, we take the third role we play is that one of the servicer. So we continue to monitor these companies on a 24/7 basis, which might seem very big brothery, but it helps us to control the risk and in the end also make the financing less expensive because we have a full-time view on everything. And we make sure that the flows of money work, although we never touch any of the money flows. So they really go between the buyer and the seller, and then the seller and the buyer.
Lender and the borrower, so to speak. Interesting. Yeah, I mean, tons of questions, and I'm cheating a bit because we spoke about this earlier. So let me just try to break it down, make sure that I have a clear understanding. I, for example, am a SaaS company. I have customers paying for subscriptions. I need more money for growth, for example. But maybe I don't want to raise from VCs. I don't want to dilute my ownership of the company. But I am making revenue. I have cash flow. So I can basically sell a year of my revenue at a discount.
Exactly.
I previously said I'd be paying interest, but it's not so much interest, it's a discount rate.
Yeah. So you basically discount, you buy it at a discounted rate. It's worth whatever will cash flow over the next 12 months, and you buy that amount at a discount.
Okay.
Exactly.
Cool. Yeah. And then Levenue sits in the middle, doing the sort of risk management, underwriting, looking at the company data, looking at, I guess, customer churn, growth. Okay.
Exactly.
And then connecting the investors who want to provide this financing.
Exactly. And the investors are obviously also a big part of what we need to maintain. You want to have enough people bidding on every auction, so to say, because when someone requests financing, it creates what it's called, we do that under a system of a Dutch auction. So it basically goes online.
Crypto
they will know, yeah. And then for a couple of days, it sits there. And what we try and do is get as many people to make a bid on that contract in order to lower or to make the pricing of what is the right discount rate for your company as market-driven as possible. So one of the really important things for us is to have enough investors with different risk levels to make bids on these things, and that's how.
Okay. So when different investors are making bids on these cash flows, they're actually bidding, right? They can say, I will give this much at this much discount.
Exactly.
I see. Okay, cool. So open competition, and then if somebody is willing to take on more risk, they can offer a better rate.
Yeah.
Okay. Cool. So I guess the natural thing to lead into is the sort of supply side of lenders, right? Yeah. And I think you told me you've done over €1 billion in volume.
Yeah, in total since we started. Yeah, we've crossed the billion a couple of months or weeks ago.
Congrats.
Yeah,
that's exciting.
Yeah.
And I imagine that you want to keep growing that number, and there's probably a lot of companies that you need this financing.
Yeah, I think that's maybe going back to the need for this, because $1 billion sounds like a lot of money, and it definitely is a lot of money. But what we call it the financing gap, and it's a global issue for small and medium companies. Banks are starting to have real difficulties with lending to these companies for two reasons. Number one, there's a lot of regulation, global banking regulation around how much risk exposure can they have to SMEs. And it's a very capital inefficient exposure to have for a bank, which means they'd rather have exposure to other things. And then the second thing is that understanding all these new business models and having all these very technological entries into all these data systems is just something that the traditional banks haven't invested in. Which makes it really hard for them to underwrite the risk or even understand the risk. And they just shy away from it, which leaves, I think, right now, a 3 point, I don't know what the exact number is, trillion finance gap for companies that want to grow and need financing to grow, but they can't find it in the traditional sector.
Interesting.
And there is then on the other side, obviously, the equity providers, and they definitely play a role. But the way I always look at it is, if you want to do long-term things, like you want to invest in a new system that will, like, on the long term have a big impact on your company, it makes sense to raise equity, because the cost of raising equity is okay if you can spread it out on a long-term project. But say that we have a company, you and I have run a company, you're the marketeer, right? You want to just boost growth, users' growth. So you need a budget, and it's a very short-term thing. You're going to spend 100K to get a new segment that we've found out is good, right? Yeah. That's what you are going to do.
Market to them, get all the ads.
And I'm on the engineering side, and I want to rebuild a big portion of our tech stack that will save costs for the next 10 years. My 100K, it's like my project, you could raise equity because it's on a long-term thing. For your thing, it's kind of stupid to dilute ourselves just for something short. And 50K, like, it should, like, the returns on those on your 100K or 50K, like, they should be pretty direct or quick. Yeah. So why not sell one of the things that we actually own, which is our revenue, and use that as a leverage to get you the cash and not dilute ourselves.
Wow. That's super interesting. So who are the typical buyers of this revenue right now?
Yeah, right now it's that's the difficulty of doing this, and especially I think in Europe, there is a lot of regulatory red tape around who can do this.
Accredited investors?
Not even. I mean, we don't have any natural persons doing this, so they need to be companies. They need to have a financial label to themselves, so holding companies, that kind of stuff. So we started out where it was easiest, which was like the typical single family office, and then especially pretty young people that understood tech. I think once we started getting traction there, kind of like expanded into the normal or the more traditional family offices. And then once we got to a certain volume, we were able to convince some asset managers, some like very esoteric hedge fund guys, some insurance companies. For an insurance company, it's really cool to have an asset that it has a steady income stream, so to say, or a steady cash flow linked to the asset.
Yeah.
But we always have to be really careful of not getting too big of a new actor into the ecosystem, because you don't want them to, at a certain point, gather too much market control.
Throw their weight around.
Yeah, throw their weight around, and then like take out the balance that is so crucial to what we try and do. Because we obviously want it to have a really good yield for the investors, but we don't want it to be overly expensive for the people getting financed. So it's a really big balancing act of like, what's the next step? Aren't they too big? Do they fall within the regulatory framework that we have to like take into consideration? And I mean, we do this in what is it now? I think 21 or 22 countries in Europe. It's all different regulations. So whatever we do in the UK is completely different as what we can do in Germany. But we do want to try and standardize it as much as we can for the investors. So it's a really big balancing act.
Okay, that's interesting. Yeah, I mean, you're really trying to align all the incentives between the different market participants, which is really cool. And I think a lot of people within my space, within crypto, blockchain, Ethereum, that's kind of how we feel our technology is best used for in a lot of ways, which may be a good segue into Loom Finance, which some people may have heard about, some Twitter posts, a great white paper that you should definitely read.
Yeah.
Tell me about Loom and how that plays into the next stage of Levenue.
Yeah. For us, and when I say for us, I'm still speaking for Levenue. For Levenue, finding or diversifying its investor base is really important. And I think we, like last year, we kind of got to a point where we either had to go and find these very institutional investors, but that would change our business entirely because, I mean, these guys talk about hundreds of millions at once, which would completely dislocate the balance in our marketplace. But then on the other side, I mean, there's not that much other solutions in traditional finance to find liquidity. Unless you go to retail, but then you're gone for like a 4-year super regulatory kind of track.
Going
and we
public.
didn't really want to go there.
Yeah.
So crypto came to mind. I mean, right? And then we met the people at Lambda Class through Paul Finance, who helped us think about whether this would even be possible. So that's how we got into contact. And really quickly, I mean, we clicked as people, as also as like a vision of where finance should go and is going. And we decided to jointly set up a new entity that we have called Loom. I think it's the triple L. We had to stay within the L.
Levenue, Lambda, Loom.
Loom, yeah. Which is being set up right now as the component that will invest on the Levenue platform and get its liquidity in the crypto world.
I see. So it's a DeFi protocol that acts as a lender or an investor.
Exactly, yeah.
On Levenue.
On Levenue.
Okay.
Yeah.
Okay. So I'm guessing the general idea is let's connect your existing fintech business, which has a bunch of companies that need funding, need financing, with all of the liquidity that is available on Ethereum and in the crypto ecosystem.
Yeah, exactly. And I mean, I'm trying to start and understand the lingo of the crypto world, but it's a real world asset. That's why I said earlier. I think it's also a real world problem. Like these SMEs getting paid is a real world problem that needs solving. Their revenues exist; they're there, which means that the cash flow and the yield is there, sitting there. We want to bridge that into the crypto DeFi world.
Cool. So you have small and medium-sized enterprises with recurring revenue. They want financing. We have people, entities on Ethereum that have capital to deploy. They want yield.
Yeah.
So you're connecting.
And they want yield in a diversified way as well, I think.
Yeah.
Right.
Yeah.
So there you go.
It's beautiful. Bringing real world yield on chain and bringing liquidity, capital off chain to these real world businesses.
Exactly.
Beautiful. Yeah. So could you maybe break down at a high level how this would sort of work?
Yeah, the way I see it, and again, I'm really sorry from a technical point of view, it's Lambda is definitely the right guys because we don't have that knowledge. The way it works right now, and I mean it's live on the testnet, so to say. So it's all being coded and it works. There is a smart contract that we created where people can lock their crypto funds into, and for the moment we're going to just focus on USDT and USDC. We'll eventually make that broader. So they lock it in as a bid. So the bid, I want to buy this amount of revenues at this discount. That's the amount they lock into the smart contract. The smart contract interacts with our Dutch auction that happens on the Levenue platform. So they're basically competing with other participants of that marketplace. In case the smart contract's price wins, it auto deploys itself it off ramps the crypto into the fiat world. The company receives the fiat, starts paying back on a monthly basis. So basically 30 days later, the first fiat payment goes to that bank account, which then on-ramps it back into the smart contract and pays it out to the person who originally did it. That's step one. Step two will be to ensure that you can trade, or that you can basically sell and create an entire secondary market for this.
Tokenize these assets.
Yeah, tokenize it. Create the secondary market. But step one is as I explained. It's pretty straightforward kind of thing. So smart contract was really important. Finding a way to on and off ramp this in these flows was really important. And then the third thing was, how do you set this up as an entity? Number one, that is owned by both Lambda and Levenue, but is regulated as well and plays within that entire sphere of things. So those were the big three challenges that we've been focusing on for the last couple of months.
Super cool. I mean, without getting too much into the technical details, these are all great examples of why you would want to launch an L2, because now you can have all the connectors that you need for the on-ramping, off-ramping, making sure that as this scales, it can support a very high number of transactions and all the market participants who want to be accessing these assets. Super cool stuff, and I'm sure we'll do some more stuff around the technical detail for all the crypto people who are interested in the architecture. But there's another piece that we discussed earlier that I wanted to get your thoughts on before we wrap up. Aside from the liquidity and the sort of financial market aspect, earlier you were talking about how one of the things you do as Levenue is these companies who want financing, they are sharing a lot of data with you, right? Because you need to make sure that they are credit worthy, I suppose.
Yeah.
And
whether the data that we receive, first of all, is true. And verify the fact that whatever we're getting in this data stream on a daily basis is correct and coherent with what we know.
So right now, this is all through sort of traditional Web 2 tech.
Yes, it is, and it's. I think if you'd ask me what the biggest challenge has been for us, the liquidity is a challenge, but it's a manageable challenge. One of the biggest challenges for us is we have a lot of data of these companies, which is great for our underwriting, but it's really private data, so you don't want to be sharing the entire database with people making the decision whether to finance, yes or no. So we've had to play a role of being the trustworthy partner that looks into the details and then generalizes them in such a way that they become enough information for someone to make an investment decision. And that's been a really hard thing to do, because we want to keep it private, but then again, on the other side, who is Levenue and who is Ben and who's the team, right? To create enough trustworthiness on the other side on the investor side, and it's been a constant how do we do this in a good way? And I think that the more scale you get, the harder that problem becomes. And I think for me, one of the coolest things about being linked with Lambda and now having Loom is the fact that we can use the crypto's encryption knowledge and ways of making something trustworthy and verifiable in a way that still allows for privacy. And I think having spent now, 4 days here at DevCon, those are the things you hear people talk about. So it's values that seem to be really important to the crypto world, and I kind of that's what I want to get into, because it's a really interesting problem, I think, to solve.
I completely agree, and those are also I think you hit the nail on the head there. These are very, very important things within the industry, and at least for the people who are building things that matter, in it for the right reasons. I think these are the sorts of use cases that people are really excited to solve, and the technology is advancing super quickly, and you're working with the right people to implement this.
Yeah.
So yeah, I think there's gonna be a lot of exciting stuff for everyone, for for the companies who need financing, for people who want diversified income streams. It's gonna be a fun future.
Super fun ride.
Yeah,
I'm looking forward to it.
Yeah. So Ben, any last thoughts, comments, calls to actions, things you'd like people to do or remember from this?
I think calls to actions for us, it's really great to receive a lot of feedback on the white paper. Obviously, any ideas around this verification part and that, like, more than welcome. It's one of the things I really look forward to solving. So any ideas around that, more than welcome. And then, I mean, yeah, follow us on the channels, the right channels, to see when and how Loom gets open or opens itself up to the world.
Exciting stuff. Well, Ben, thank you so much.
Thanks, Boris.
This was a pleasure.
It was really great. Thank you very much.